Welcome back, everybody. Today, we're going to be diving into a really interesting book called Trade Your Way to Financial Freedom by Van K. Tharp.
Oh, yeah.
Now, this isn't your typical, get rich quick trading manual.
Yeah.
In fact, Tharp actually uses this really interesting analogy about the Holy Grail when he talks about, what it takes to actually succeed as a trader.
Right.
And, have you ever thought about, what really separates those traders who consistently make money from, the rest of the pack? I'm guessing it's not just about, picking the right stocks every time, right?
You're absolutely right. It's definitely not about just picking the right stocks.
Yeah.
Tharp actually argues that this holy grail of trading that
Right.
everybody's always, looking for.
Yeah.
It isn't some secret formula or,
Yeah.
crystal ball.
Right.
It's all about mastering something much more important, and that's yourself.
Okay, so let's break this down a little bit.
Sure.
What exactly does he mean by, mastering yourself?
Well, it's about getting a handle on your psychology, your mindset, your whole approach to the markets.
Right.
He calls it achieving internal control. So, they're not talking about controlling the market here,
Right.
which is obviously impossible.
Yeah.
We're talking about controlling yourself and how you react to the market.
Okay, that makes sense.
Yeah.
I've definitely been in those situations where I was so sure a stock was going to just take off, and then bam, it just totally tanked.
Oh, yeah. We've all been there.
Yeah, and it's so frustrating.
Absolutely. The market is unpredictable.
Right.
And, that's where understanding our own biases comes in.
Yeah.
Tharp actually dives into what he calls judgmental biases.
Okay.
These are like the mental shortcuts our brains take when we're just completely overloaded with information.
Right.
Did you know that the amount of information out there doubles every single year?
Wow.
But we can only process a tiny little fraction of it.
That's crazy. No wonder we rely on these shortcuts.
Right.
Yeah, so how do these biases actually play out when you're trading? Well, I know Tharp mentioned something called the lotto bias, right?
Yeah, the lotto bias is a big one. When you obsess over finding the absolute perfect entry point for a trade,
Right.
but you totally neglect your exit strategy.
Oh.
It's like playing the lottery, focusing only on picking the winning numbers,
Yeah.
but not thinking about what happens if you lose.
Oh, I see. And then there's that law of small numbers thing.
Right.
I'm sure our listener has seen this one play out
Oh, yeah, absolutely.
on the charts a few times.
This is where you spot a pattern a few times,
Yeah.
and you suddenly think oh, I've got this figured out.
Yeah, yeah.
That's a guaranteed win.
Right, right.
But in reality, just because something's happened a few times,
Yeah.
it doesn't mean it's a reliable predictor
Right.
of future outcomes.
So true.
Yeah.
You know what I think one of the most dangerous biases for traders
Oh, yeah.
has to be that conservatism bias.
Yeah.
It's that stubborn part of you that just clings to a belief even when all the evidence is screaming wrong.
Totally.
Yeah.
It's tough to admit when we're wrong,
Yeah.
especially when we've got,
Especially with money on the line.
money. Yeah, skin in the game.
Yeah, exactly.
Yeah.
Now, Tharp actually emphasizes in the book that you need to define your trading objectives
Right.
before you even start thinking about a trading system.
Absolutely.
Which I think a lot of traders just kind of skip over that step.
Absolutely.
They just jump right into picking stocks or whatever.
It's like setting off on a journey without a map.
Right. Yeah.
You don't know where you're going.
Yeah.
Tharp encourages this deep self-reflection.
Mm-hmm.
He wants traders to ask themselves some really tough questions.
Yeah.
What's your personal edge in the market? What gives you an advantage? What are your strengths and weaknesses?
Right.
How much risk can you truly handle?
Yeah.
Both financially and emotionally.
Right.
I think that's a big one.
And I think it's crucial to be realistic about potential returns.
Oh, absolutely.
It's so easy to get caught up in that get rich quick
Right.
hype.
Yeah.
But,
Yeah.
sustainable success in trading is about setting achievable goals.
It's about the long game,
Right.
not the quick win.
Exactly. Yeah. And having those, clear benchmarks. How will you actually know if your plan is working or not?
Cool, but
If you don't have that, then you're just kind of,
you're just drifting.
Yeah, exactly.
You need to be able to track your progress and make adjustments along the way.
Yeah, absolutely.
Yeah.
So Tharp dives into all sorts of different trading concepts in this book.
Right.
He doesn't endorse any particular one.
No.
But he really encourages you to analyze them critically and see if they align with your personal objectives
Yeah.
and your risk tolerance
Exactly.
So, for example, like you've got approaches like trend following,
Right.
which is basically, riding the wave of existing market trends.
Yeah, riding the momentum.
Yeah, it sounds simple enough in theory.
It does.
But it's not easy.
Yeah, it takes a lot of discipline to stick with it.
Yeah, especially when those trends change.
Exactly. And then you've got fundamental analysis.
Right.
Which is all about understanding, a company's...
The fundamentals.
Yeah, their underlying value and their potential for growth.
Right.
It's definitely a much more long-term approach.
Yeah, a lot more research intensive too.
Yeah, exactly.
A lot of work goes into it.
And then for traders who are like really into seasonality,
right?
There's that whole concept of exploiting those predictable price fluctuations that happen based on the time of year.
Yeah, like knowing when to buy those holiday decorations.
Exactly. After the season is over, exactly, to get the best deals.
To get those best deals.
Yeah.
Speaking of getting the best outcomes, Tharp introduces this concept of expectancy, which is a little bit more nuanced than just like winning or losing on a trade.
It's not just about being right or wrong.
Right.
It's about the average outcome that you can expect over many trades.
Yeah.
It's like thinking about the long game, not just focusing on individual wins and losses.
Right. And he uses this really great analogy to explain it.
Does he?
It's the marble bag analogy.
Oh, yeah, the marble bag.
It really helped me wrap my head around it.
That's a good one.
So imagine like a bag filled with marbles.
Okay.
And, some marbles represent wins. Other marbles represent losses.
Okay.
And the size of each marble corresponds to the magnitude of that win or loss.
Right.
So you could have a bag with like lots of small wins and then a few really big losses. Or you could have a bag with fewer wins. But those wins are much bigger on average.
Right. So it's not just about how many times you win.
Right.
It's about how much you win when you win.
Exactly.
And how much you lose when you lose.
Yeah. And the key takeaway there is that a system with a lower win rate but higher average wins can actually be more profitable in the long run than a system with a high win rate but small wins. So it's all about the overall math.
Exactly.
Not just those individual wins and losses.
The big picture.
Right, exactly.
Yeah.
Now, Tharp outlines like 6 essential components of a successful trading system. And he starts with entry techniques.
Okay.
Which is how you actually like get into a trade.
Yeah.
But kind of surprisingly, he stresses that entry techniques might be less important than many traders think.
Yeah, because you could have a perfect entry.
Right.
And still lose if you don't manage your risk properly.
Exactly. And that's why that second component is so crucial, those protective stops.
Right. Your safety net.
Yeah.
Knowing when to get out.
Right.
To protect your capital.
It's like that emergency brake you pull when things are going downhill fast.
Okay.
And then on the flip side, you've got...
What do we got?
Those profit-taking exits.
Right.
You got to have a plan for like...
When to get out when you're winning?
Yeah. When things are going well, you don't want to let greed take over.
Yeah. You can get greedy.
Right. And then there's market selection.
Right.
Not all markets are created equal, right?
Absolutely.
You got to choose the right markets to trade.
Yeah.
Based on your system.
Based on your system, your risk profile.
Yeah, and your risk profile.
Right.
And then, of course, you can't forget about trade costs.
Oh, yeah. Those trading costs.
The commission slippage.
Yeah, they can really eat into your profits if you're not careful.
Exactly. And then finally, the most important element.
Okay, the most important.
According to Tharp.
Okay.
Is position sizing.
Right. How much you risk on each trade.
It's huge.
This can make or break you.
It really can.
Even with a great system. If you're risking too much on each trade.
Yeah. One bad loss can wipe out all your gains.
Wow. So we've covered a lot of ground here already.
We have.
But Tharp doesn't stop there.
Oh, no.
He also goes into like these really intriguing, advanced concepts in the book.
Like what?
Like using neural networks.
Oh, wow. Neural networks.
It's like having a superpowered trading brain.
It is. It's like having a supercomputer crunching numbers.
Yeah.
Spotting patterns that we might miss as humans.
And he also talks about
the
impact of psychological factors on our trading decisions.
Yeah, because even with the best system in the world, our emotions can sabotage us.
Right. We've all been there.
We have. We're all human.
Yeah, we're like fear and greed.
Oh, yeah.
Just take over.
Powerful forces.
Yeah, and they mess with our decision-making.
Even when we know better.
Even when we know better.
Yeah. So it seems like so far this book, Trade Your Way to Financial Freedom, is about so much more than just like technical analysis.
It really is. It's like a journey of self-discovery.
Right.
You know?
Yeah.
It challenges the conventional wisdom about trading. It wants you to take this holistic approach to mastering the markets.
Yeah.
And mastering yourself.
Exactly. And I'm really excited to delve further into some of these concepts with you.
Me too. This is fascinating stuff.
Yeah, this is really good stuff.
I'm really enjoying this conversation.
Me too. This is great. You know, before we move on from those 6 components of a successful trading system, I'd love to hear a little bit more about this position sizing thing.
Sure.
Because it seems like something that a lot of traders might underestimate.
Yeah, it's huge.
Yeah.
Position sizing is, it's absolutely critical.
Yeah.
You could have like the most amazing system in the world.
Right.
But if your position sizing is off, one bad trade could just wipe you out.
Yeah, that's scary. It's all about managing that risk.
Right.
So you can stay in the game for the long haul.
Okay, so how does Tharp actually like approach this position sizing thing?
Well,
does he offer like any specific models or strategies?
He does. He presents a few different models, each with their own pros and cons.
Okay.
One of the simpler ones is the equal units model.
Okay.
It's pretty straightforward. You just divide your capital equally among a fixed number of positions.
So let's say I have like $10,000 to invest.
Okay.
And I've decided to trade like 5 different positions. So I would put $2,000 into each one.
Exactly.
Okay.
But the downside of this approach is that it doesn't take into account the fact that different markets and assets carry different levels of risk.
So you could end up being like way overexposed in some positions and underexposed in others.
Yeah, it can get a little unbalanced.
Yeah, okay.
A more sophisticated approach.
Okay.
And the one that Tharp actually recommends is the percent risk model. Okay, the percent risk model.
This model forces you to think about
Okay.
how much of your capital you're actually comfortable risking
Okay.
on any given trade,
Right.
usually as a percentage.
Okay, so if I'm okay with risking like 2%
Okay.
of my $10,000 on each trade, that means my maximum loss for any single trade would be $200.
Exactly.
Okay.
And then you adjust how many shares you buy or sell based on where you set your stop loss.
If my stop loss is like $10 away from my entry point, I wouldn't buy more than 20 shares.
Right.
Because 20 shares times $10 equals my $200 risk limit.
You got it.
Okay.
That way, even if the trade goes against you and hits your stop loss, you're only losing that predefined 2% of your capital.
Okay.
It's like building this buffer to protect yourself from those unexpected market swings.
Okay, I like that.
Yeah.
Now, Tharp also talks about this thing called mental rehearsal.
Oh, yeah, mental rehearsal.
It's like a key component of successful trading.
It's huge.
This sounds almost like something an athlete would do.
It is very similar.
Those are a big game.
Yeah, he's basically saying,
hey,
you need to mentally prepare for different market scenarios, both good and bad.
Right.
So you're not making decisions based on like fear or greed.
Yeah. You don't want to be emotional.
Right in the heat of the moment.
Yeah.
So instead of panicking and like selling everything, when a trade starts going against you, you've already mentally walked through that scenario.
Okay.
And you have a plan.
So you're not just like caught off guard and reacting emotionally.
You're more likely to stick to your system.
Right.
Even when your gut is telling you to do something else.
That makes a lot of sense.
Yeah.
There have definitely been times when I've let my emotions get the best of me.
We all have.
And it never ends well.
It rarely does.
Yeah.
But the more you practice this mental rehearsal thing, the easier it becomes to detach from those knee-jerk reactions.
That's a good point.
Yeah.
You know, this all circles back to like Tharp's main idea that successful trading is as much about self-mastery as it is about understanding the markets.
Exactly.
It's not just about the technical stuff.
It's about you.
Yeah.
About your mind.
It's about you.
Yeah.
And he actually lays out 7 steps.
Does he?
For developing this kind of self-awareness and discipline.
Okay.
He calls them the 7 steps to mental mastery.
7 steps. Okay.
Yes, 7 steps.
I like it.
So let's hear them.
Okay. So step 1 is all about understanding your own belief system.
Okay, belief systems.
This is crucial because your beliefs shape how you see the markets, how you make decisions.
Yeah.
It's about taking a step back and questioning those beliefs to see if they're actually serving you.
Because sometimes we operate on autopilot without even realizing those underlying assumptions that are driving our behavior.
It's unconscious.
Yeah, exactly.
Yeah. Okay, so step 2.
Step 2 is all about taking responsibility.
Okay.
This is a big one. It's about owning your results.
Okay.
both the wins and the losses.
Right.
And not blaming the market or other external factors for your mistakes.
It's tough to do.
It can be a hard pill to swallow.
Yeah, especially after a tough loss.
Yeah, for sure.
But I guess the point is, if you're always pointing fingers outward,
right,
you're never going to actually learn from your mistakes.
You're never going to grow.
Yeah.
Yeah, and improve.
And I bet you our listener, being an experienced trader, understands how important this is.
They've been there. They get it.
Okay, so step 3.
Step 3 builds on that taking responsibility piece.
Okay.
It's all about identifying your weaknesses.
Okay.
So Tharp's advice here is to be brutally honest with yourself.
Yeah.
Are you prone to overtrading?
Right.
Do you get emotional and break your rules? Acknowledge those weaknesses.
Yeah. So you can start to address them.
It's like shining a light on those bad habits.
Yeah, get them out in the open.
Yeah.
Expose them.
That might be holding you back.
Exactly.
Yeah.
And then figure out how to replace those bad habits with more productive ones.
Okay, so what's step 4?
Step 4 is all about keeping a trading diary.
A trading diary.
Trading diary, yeah.
Okay.
It's not just about tracking your wins and losses, though.
Oh, okay.
It's about documenting your thought process.
Oh, okay.
Your emotional state at the time of each decision.
That's interesting.
Yeah, it's like having a therapist.
Yeah.
For your trading journey.
I like that.
By tracking your thoughts and feelings.
Yeah.
You can start to see patterns in your behavior.
Hmm.
Maybe you notice that you tend to make impulsive decisions when you're stressed or tired or,
or hungry.
Right, exactly.
Yeah.
And this awareness can help you avoid making those same mistakes in the future.
Yeah, I like that.
Yeah.
Okay, so step 5.
Step 5 is about being present during your trading day.
Being present.
Yeah, being fully engaged in the process.
Okay.
Not just going through the motions.
So what does that look like in practice?
Well, it's about paying attention to your mental and emotional state.
Okay.
Are you feeling focused and disciplined?
Right.
Or are you distracted and anxious?
Right.
How are those feelings influencing your trading decisions?
Okay.
It's all about developing that self-awareness.
So it's almost like bringing that mindfulness practice
Exactly.
into your trading day.
You got it.
Okay, I like that.
Now, step 6 will probably sound familiar.
Is it mental rehearsal?
You got it.
Okay.
Mental rehearsal is huge.
Okay.
Tharp recommends taking some time at the beginning of your trading day to visualize different scenarios, both positive and negative.
Okay.
Think about how you'll respond if a trade starts going against you.
Right.
What steps will you take to manage your risk?
It's like that pre-flight checklist that a pilot goes through before takeoff.
That's a great way to put it.
Yeah.
And finally, step 7 is all about reviewing and analyzing your performance.
So it's not just about making the trades.
Right.
It's about taking the time to reflect on them afterwards.
Exactly.
Okay.
Tharp suggests doing a daily debriefing.
Okay, a daily debrief.
Ask yourself, did I follow my rules today?
Right.
What could I have done better? It's about celebrating your successes.
Yeah.
And learning from your mistakes.
Yeah, I like that.
Yeah.
I love how these 7 steps really provide like a framework for developing that mental toughness and emotional resilience.
They do.
That are so crucial for successful trading.
It's all about the mindset.
Yeah.
It's clear that Tharp believes that true mastery in trading starts within.
Absolutely. It's about understanding yourself, your biases, your reactions to the market, just as much as it is about understanding,
the technical analysis.
Technical analysis, yeah.
Yeah. The charts, the indicators, all that stuff.
Exactly.
But it starts with you.
It starts with you. And, this applies to so many other aspects of life, too.
It does, not just trading.
Totally. Whether you're running a business, pursuing a creative passion, just navigating the ups and downs of everyday life, developing this inner strength and self-awareness.
Right.
It's incredibly valuable.
It really is.
Yeah.
Now, before we wrap up our deep dive into trade your way to financial freedom, there's one more concept I'd love to discuss with you.
Okay, shoot.
And it's this idea that even with a system that's statistically likely to make money over time, you can still experience those periods of drawdown.
Yes, drawdown.
Yeah.
The part of trading that no one likes to talk about.
Right.
But it's a reality that all traders...
It's inevitable.
Yeah. You got to be prepared for it.
Exactly. And Tharp doesn't shy away from it.
No, he doesn't.
He actually encourages traders.
Does he? To plan for their worst case scenario.
Interesting.
Which might sound counterintuitive.
It does.
But I'm curious to hear what his reasoning is there.
Well, he argues that by mentally and financially preparing for those potential downturns, you're less likely to panic and make impulsive decisions when they inevitably happen.
So it's about taking the fear out of the unknown by having a plan in place.
Yeah, exactly. You're not just hoping for the best.
Right.
You're actually preparing for the worst.
Yeah. And he suggests asking yourself some tough questions, like what's the maximum drawdown you can handle before you start doubting your system?
Yeah, good question.
How will you manage your emotions if you experience a string of losing trades?
How are you going to deal with that?
What steps can you take to minimize your risk during those periods of market volatility?
How are you going to weather the storm?
Yeah.
You know?
So it's about being proactive rather than reactive.
You're not just getting tossed around by the waves.
Yeah.
You've already considered the possibility of a storm. And you have a plan for weathering it.
You've got it.
Yeah.
And this ties back to that concept of internal control.
Totally.
That we were talking about earlier.
Yeah, full circle.
Yeah.
You can't control the market.
Right.
But you can control how you respond to it.
You can control your own actions.
Exactly.
It's about having a system.
Yeah.
Having the discipline to stick to it.
Discipline is key.
And having that mental fortitude.
Yeah.
To ride out those inevitable ups and downs.
It's not easy.
It's not easy, but it seems like that's what really separates those successful traders from the rest.
It really is.
Yeah.
And while Tharp provides a ton of technical information and strategies in this book, he's ultimately saying that the most important journey a trader can take is the journey of self-discovery.
The journey of self-discovery.
It's an inner journey.
Yeah. That's powerful. You know, it's interesting how Tharp doesn't just focus on the technical parts of trading.
Yeah.
He spends a lot of time on that psychological side of things.
Like the mental game.
Yeah, and how important it is to understand your own biases and weaknesses.
Yeah, for sure.
He even gets into some pretty fascinating stuff like using neural networks to analyze market data.
Oh yeah, neural networks. That's cutting edge stuff.
It is.
It's like having a supercomputer in your corner.
It is. It's like
crunching numbers, spotting patterns that we as humans could never even see.
I've heard some traders say that using algorithms and technology takes the emotion out of trading.
Oh, really?
Yeah.
I don't know about that.
But Tharp seems to be suggesting that even when you're using these advanced tools, you still need to be aware of your own psychological biases.
Yeah. You can't just blindly trust the algorithm.
Right.
You have to remember that any system, no matter how sophisticated, can have its limitations.
Right.
You still need to be able to make sound judgments.
Right.
Based on your own analysis and risk tolerance.
Yeah, you got to use your own brain, too.
Exactly.
Tharp also talks about the importance of having a well-defined trading system.
Yeah.
One that you've back-tested and that you actually trust.
Right. Got to have a plan.
Yeah. But he also acknowledges that even with a system that has a positive expectancy, meaning it's statistically likely to make money over time, you can still experience those periods of significant drawdown.
Ah, yes, the dreaded drawdown.
Yeah.
Part of trading that no one likes to talk about.
Right, but it's inevitable.
It is. It happens to everyone.
Every trader, no matter how skilled, will experience those periods where their system just isn't working as well as they'd like.
It's part of the game.
And I think that's where the psychological aspect comes in again.
Right.
Because it's so easy to start doubting yourself and your system.
Especially when you're in a drawdown.
Right, when you're going through a drawdown.
Yeah, that's when those doubts creep in.
Yeah, and that's why Tharp emphasizes the importance of planning for those drawdowns.
Yeah, plan for the worst.
It might sound counterintuitive, but he actually encourages traders to plan for their worst-case scenario.
Yeah, but it makes sense.
Which does seem a little bit counterintuitive. Wouldn't that just make you more anxious and stressed about trading?
You'd think so, right?
Yeah.
But Tharp's argument is that by mentally and financially preparing for those potential downturns, you're less likely to panic and make impulsive decisions when they inevitably happen.
So it's about taking the fear out of the unknown by having that plan in place.
It's like having a fire escape route.
Okay. Yeah.
You hope you never have to use it.
Right.
But if there's a fire, you're glad you have it.
Yeah, that's a good analogy.
So Tharp suggests asking yourself some tough questions.
Okay, like what?
Like, what's the maximum drawdown you can tolerate before you start doubting your system?
Right.
How will you manage your emotions if you experience a string of losing trades?
Yeah. How are you going to handle that?
What steps can you take to minimize your risk during those periods of market volatility?
So it's about being proactive.
Exactly.
Rather than reactive.
You're not just getting tossed around by the waves. You've already considered the possibility of a storm.
Right.
And you have a plan for weathering it.
Yeah, you're prepared.
You're prepared.
It seems like a lot of what Tharp's talking about boils down to this idea of internal control.
It does.
You know, you can't control the market.
Nope.
But you can control how you respond to it.
That's the key.
It's not about finding some magic formula or predicting the future.
It's about understanding yourself,
your
strengths and weaknesses, and developing the discipline and the mental fortitude to execute your system even when things get tough.
So as we wrap up our deep dive into Trade Your Way to Financial Freedom, I want to leave our listener with this thought.
Okay.
What is one step you can take today to improve your approach to trading or investing?
Yeah. What's that one thing?
Maybe it's defining your personal objectives.
Right.
Developing a trading diary. Practicing mental rehearsal.
All great ideas.
Whatever it is. Just remember that success in the markets and in life, really,
that's true,
often begins with mastering yourself.
Well said. I couldn't agree more.
It's been a pleasure exploring these concepts with you today.
It's been fun.
And to you, our listener, thank you for joining us on this deep dive into the world of trading and self-mastery.
Yeah, thanks for listening.
We hope you've gained some valuable insights that will help you on your own financial journey.
Yeah, we hope this was helpful.
Remember, there's always more to learn, so keep exploring, keep growing, and until next time.
Happy trading, everyone.
Happy trading!